Okay. Well, thank you all for coming today. And thank you to our SBA experts from Huntington Bank for taking time today to share their knowledge with the small business audiences. They'll work hard to navigate the elements of the CARES Act and the Paycheck Protection Program. And before we begin, I just want to take a moment to recognize all of you here on this call. Your hard work and dedication for your business, employees, and your community during these trying and ever-changing times is surely not go unnoticed. As we know, small businesses and particularly restaurants are really feeling the impacts of the COVID crisis more than any other business sector. And just please do know that we here at Sustainable Pittsburgh are here for you, both in the immediacy and for the long haul, to help give you resources and guidance and support to help your business adapt. So we're doing what we can here for you. So just to run through the agenda really quickly, we're going to do some introductions. I'm Rebecca Bykowski. I'm a program manager here at Sustainable Pittsburgh. Also joining us today are Heather Thomas and Lindsay Cost from Huntington Bank, and along with nearly 70 small business participants that have signed up to participate with this webinar today. So I'm sure some will still be rolling in. So we'll start out with just a brief overview of Sustainable Pittsburgh. I know that some of you here might not be familiar, but we'll just share a bit about our organization and some of the programs we offer. Then we'll turn it over to Huntington Bank, to Lindsay and Heather, and they're going to share with you about COVID-19 access to funding, some tips and pointers for planning and preparedness, the types of COVID-19 small business relief programs that are available through the Small Business Administration, how the loans work, their eligibility, what the funds can be used for, and next steps for small businesses. We'll follow that up with a Q&A where we can get all your questions answered and then just give you some additional resources that are out there in support for small businesses. So just a couple things with housekeeping if you weren't on here just at the very beginning of the call when Jim started to talk about this. But one, we're going to be recording this webinar for sharing out. So due to that, we are going to have all participants except the presenters kept on mute. And given that we have a larger audience so that we can best manage the questions that are coming through, any questions that you do have that might arise during the presentations, please do enter them into the chat box. Those questions will come to me directly, and I'll be gathering them and sharing them during the Q&A session with our experts from Huntington Bank. If you're not sure where the chat function is, you can find that located at the ribbon at the bottom of your screen. And if anyone here happens to be joining by phone and you have questions, you can email those to me at rbykowski, that's RBYKOSKI, at sustainablepittsburgh.org. So just to start, Sustainable Pittsburgh, we are a nonprofit, and our mission is to empower decision-making that builds fundamentally equitable, resilient, healthy, and prosperous region. We work with hundreds of organizations, universities, communities, local governments, and businesses, ranging from small mom and pop shops to global companies, on a range of projects to advance sustainability policy, share expertise, and strategically build professional networks that advance collective impact. So many of you on this call today, you've engaged with us through a couple of our different programs, one being either the restaurant program at Sustainable Pittsburgh or our shops program. Currently, we have over 165 restaurants and more than 300 small retail shops throughout the Pittsburgh area engaged with these programs and have earned a sustainable designation through them.
Hey, Rebecca.
Yes?
Have you unpaused your screen?
Oh, no.
Yep, that's okay. It's common mistake.
Oh, sorry, everyone.
Yeah. So when you unpause, then we'll, because I thought maybe you had switched slides, but I wasn't sure.
I did. Thank you very much. Okay, so. Okay, so here we are. Sorry, everyone. So through these programs, we are recognizing and championing these businesses for their sustainability commitments, along with that.
Rebecca, sorry, it's still on the same screen. Did you move it forward?
Why?
Did you hit reshare or resume share? In the share button at the bottom, if you click on it.
Right, I am. It says resume share. Yes. I
Can you
clicked.
click on that? There you go. Now you have to go back to presentation. Now you're good.
Right. But I don't know why it jumped back to that again.
Yep, you're good now.
Okay. So moving onward. Okay, so back to where we were. We're basically where I was saying, other than recognizing these businesses for sustainability commitments, we are also working to give them resources to improve and build these collaborative networks to support the overall sustainability of our region. In addition to those two programs, we also offer a sustainability performance program for municipalities in statewide partnership with the Pennsylvania Municipal League, and we're currently retooling a program for mid to large size businesses in the region. Over the last 20 years, we've been in existence. One of our primary roles is that of a convener. We've also are recognized as a resource and a teacher, and today we're happy to share with you some financial and other COVID resources that we've curated to complement this webinar. So with that, I'm going to pass it over to Heather and Lindsay, who can tell us more about the COVID-19 access to funding that's available to small businesses.
Thank you, Rebecca. My name is Lindsay Cost. I'm one of the SBA specialists here at Huntington Bank, and I'm excited to go over some access to funding options and clarifications, and looking forward to a robust Q&A moderated by Rebecca so that we can try to clarify what are very new and very unique processes that are being delivered to provide access to capital for the firms in our region. I did want to touch on some best practices in general. The exciting new programs that have been passed as part of the CARES Stimulus Act, we're going to spend some time discussing, and they certainly merit that attention because they are new and they're going to be very helpful for the firms in our region. But we want to make sure that they don't suck up all the oxygen in terms of your energy and focus, that you really take a moment to think through your capital needs, including those programs, but also beyond those programs, and also evaluate what your current debt structures are and think through that with your lender so that you are best positioned, not just through these shutdown weeks, but for the rest of 2020, that you have a strong partnership with your lender and a plan to get through what is going to be a very strange and trying year for the firms in our region, particularly those in hospitality and retail. So we shared some best practices here. We are dedicated at Huntington to making communities stronger and for supporting local businesses. Even through very difficult times, we've been the largest SBA lender in our region for the last 10 years, which includes the last recession. So we have actually gone through this, Heather and I, here at this bank, with firms who went through a really hard time before. It's been a while, but we've been through it, and we know that communication is key between your lender and yourselves as firms to try to make this as effective a transition through these challenging times as possible. So the information we're sharing here today cannot possibly be comprehensive, but we're hoping that it is a good starting point for you to work. Now, our approach, and I'm sure it's one that many, many people share, but our approach is simple, that you need to understand your goals, and hopefully your bank needs to understand your goals, and you need to work together to provide financial solutions to support your success. Huntington, and you're welcome to use this client or not, has a list of resources, including the government resources available at the huntington.com coronavirus link that's been shared here on this deck. As we move to the next slide, we want to discuss how important it is to be proactive. Now, we've had, in a way, a blessing with in many ways, a blessing with these great stimulus programs that have been initiated that felt very time sensitive and a great deal of urgency around them. So many firms have engaged actively with their lender. But don't let it stop at just the conversations regarding these stimulus programs. Don't plan to ride out the storm and just work within the government stimulus programs. Talk to your bank about the struggles that you're having and the struggles that you're foreseeing to make sure you know what relief options you have for what exists on loans you already have, how they may be customized or altered to meet your needs. Most lenders are really scrambling, Huntington included. We're scrambling our forces and working very hard on a very new program, and so you need to raise your hands and be proactive in escalating your concerns to your lenders. So there's a lot going on here that didn't exist before last Friday. So please be sure that you are being proactive about your needs with your bank. And think through your changing and evolving working capital needs. And if you're going to need additional funding beyond the PPP program that we'll discuss today, beyond the EIDL program that we're going to discuss today, make sure you're thinking through it with your lender early. And in terms of that discussion, you want to be prepared. Heather's going to speak to you about some items you'll need in terms of the PPP program, which is certainly very important. But you also are going to need a different set of information for the EIDL program preparation, and just to make sure you understand the impact that you can expect on your firm. You have an understanding of your overhead, and you can communicate that with your bank, particularly if you have any debt exposure with them, to make sure that you remain open in your channels of communication to come up with a plan, and also to make sure you don't end up on the wrong side of the ledger just through a failure to communicate the needs and what's upcoming in your next few quarters. Certainly lenders are well aware the situation that's impacting the firms in our regions outside of their control. You've been required to shut down. So these are conversations you just need to have and make sure that you're exploring all the possible options. If you're not a firm, I know many of the firms that are going to be joining today are going to be in the retail and restaurant shop. There are some firms that are still up and running and open and still an essential business, but they're going to feel pressure on their cash flow from their clients needing longer payment terms, their suppliers restricting payment terms. And these, again, are continuing conversations you need to have with your lender. And as we move towards the next slide on planning during uncertainty, remember your bank, whether you have debt or not, you're used to running a certain amount of volume through those accounts. You're certainly running a certain amount of transactions when you're at full volume that you're probably not running now. You're maintaining balances that are likely less than what you're maintaining now. So double check on those and make sure that your accounts are set the right way for a period of dormancy, so that you're not incurring fees that are just going to frustrate you in the long run. And not that your bank wouldn't perhaps work with you on waiving them, but just to adjust your account settings in recognition of its dormancy. Might not be top of mind for anybody at the moment, but certainly a part of your conversation that you should be having. Should also, if you do have loans existing on the books already with a bank, that you understand things like your loan covenants, and maybe ask a question to your banker about your loan covenants, or make sure you explore them with your accounting firm to make sure you're clear. Even if you're making your loan payments, there are other things that can put you in violation of your loan agreement. And are you clear on what they are? And is there any unavoidable covenant trips that are going to happen? And how do you proactively communicate that to your lender? The borrowing-based line of credit discussion is part of a covenant as well. You're going to want to continue that conversation with your lender as well. So these are not specifically points related to stimulus funding, but as you have this sense of urgency around taking advantage of the stimulus programs, as you should, it's important to think broadly about your needs with a bank. Now with that, I'm going to turn it over to Heather, because I know what we're all really interested in is the next part of the discussion, which are the new items in the new program. So my colleague, Heather Thomas.
Lindsay, thank you so much for that helpful and valuable information. You and I both strongly believe in that. We've both been with Huntington for about 10 years, or a little over 10 years for both of us at this point. And we've seen the value that can be delivered to clients as they follow that comprehensive approach. Lindsay's right. It's important to talk about the programs that are on the table today. I know that one of these programs is quite new to all of us. Another program has been out there and available, but it's not often used, and certainly not often used by the majority of the businesses operating in the country. So her and I both wanted to provide a lot of information on the programs that you're hearing most about today. I'm going to take it a little more in depth in terms of the information I'm presenting to you. And I'm going to start with the next slide, which is which loan is right for me. This is going to be a really nice takeaway for you, regardless of whether or not you're a client of Huntington Bank. This is really just an overview of what the SBA has on the table predominantly to share with you. There are many, many programs available through the SBA, but these are some of the programs that you are hearing the most about right now, and I'm sure the ones that you are most interested in right now. So take this as a broad overview of those programs. You'll see on the left the Paycheck Protection Loan. the funding mechanism for the Paycheck Protection Program, the one that rolled out last Friday as it moved through the House and received the president's signature, and the one I think that's on the top of our mind for most folks. I'll explain that in a little more detail, as some of you are quite familiar, as I know many of you have been able to put in your applications over the past few days. But before I go into depth about that program, I also want to highlight the Economic Injury Disaster Loan programs that are out there. You'll hear Lindsay and I refer to them as EIDL, as well as SBA folks refer to them as EIDL. This is that disaster recovery program that's available through the SBA directly. And then lastly, we want to make sure that we're serving you well by also talking through good old traditional SBA 7A lending. And by looking at these three products, I think that you can get a really nice comprehensive view of what the SBA has available to you. There have also been some exciting benefits that have come out of the Paycheck Protection Act in regards to how SBA payments are handled over the next few months. We'll let Lindsay cover that too as we exit these slide segments here. But first, let's go in a little more depth from a highlight perspective about the Paycheck Protection Loan, and that leftmost column on this slide is where we're going to focus. So the purpose of this program is to provide emergency working capital to keep your business operating during COVID-19, but the use of funds in this program is pretty specific, and that use of funds really drives the loan amount available because it is a loan. There's certainly a forgiveness aspect to this program that's very exciting, but ultimately when you sit down and sign the paperwork, it will be a loan. The use of funds include payroll costs, rent, interest payments, and utilities, and the driving force in that loan amount is really that payroll cost bucket. So when it comes to the forgiveness clause within this program, at least 75% of loan funds must be used for payroll costs. The entire loan is eligible for forgiveness, but at least 75% of the funds must be used on payroll costs. The other 25% can be allocated across the other areas which are allowed within the program usage. The amount of the loan would be up to $10 million, but it's really driven by 2.5 times the business's average monthly payroll. This is a program that we are hoping drives capital into the hands of business owners to help keep folks employed and off unemployment. You go see the clause that's 2.5 times business average monthly payroll or 10 million, whichever is less. The rate is a fixed interest rate of 1%, and the structure is out over 2 years. No payments for the first 6 months, although interest will accrue during this period. The forgiveness clause, up to 100% of eligible expenses paid with the loan funds during the 8 weeks following closing. That's a really important number. Use those loan funds during the 8 weeks following closing, and subject, of course, to compliance with program requirements, but used correctly, up to 100% of that loan is forgivable. Some really nice features of the program include no collateral and no guarantor support required. So a lot of flexibility in this program. It's going to pair really nicely with other types of lending that you have or may look to get in the future. You'll see some information specific to Huntington there as far as this program goes, but I want to move over to the next column, which is the Economic Injury Disaster Loans, or the EIDL loan program. This is the program that came about in popularity, from a popularity perspective, 2 or 3 weeks before that Paycheck Protection Program rolled out. This is the existing SBA Disaster Loan Program. The purpose of it is to supplement lost revenue on account of COVID-19. The use of the funds would be payroll expenses, fixed debts, accounts payable, and other expenses. So you'll see a little bit of redundancy there right off the bat. You'll see that this program covers payroll as well. As the Paycheck Protection Program evolved, I will let you know that these funds from both programs cannot be used for the same purpose. So if you receive a Paycheck Protection Loan to support payroll, you would need to use that loan to pay off the EIDL component that was also provided for payroll. So you can't double dip. You can certainly use EIDL for payroll expenses if you're not using PPL, but if you ultimately end up using PPL, you want to use that bucket of funds to pay off the EIDL bucket used for payroll. The amount of EIDL is up to $2 million. The rate is 3.75 for for-profit businesses and 2.75% for nonprofit businesses. So this program as well is friendly to nonprofits. Structured up to 30 years. There's no forgiveness clause. This is going to be a straight loan program, although we've heard some enhancements from the SBA about grants available in the amount of $10,000 through this program. So there's been some evolution here as well. And as far as features, this is going to feel more like a traditional SBA loan for those of you that are familiar with SBA lending. Up over $25,000, there's going to be collateral as required, and the program includes guarantor support as well. And you would simply visit the SBA's website to apply for that EIDL loan. Those loans are given directly through the SBA, unlike the Paycheck protection loans, which are facilitated through lenders. When the EIDL loans are set up through the SBA, they do assign you a case manager. So you'll have a specialist available to help you through that program and carry out whatever is necessary in using those loan funds. And then we, of course, have the traditional 7A program available. This is really the flagship program of the SBA. It's the one that Huntington uses the most to help our clients from a unit perspective. And the purpose of this, we see here new money for recovery, purposes unrelated to COVID-19. Use of funds, this program includes a lot. This is that program that lets you have multiple uses of funds all in one loan structure. Anything from refinance of current debts to the purchase and refinance of real estate, purchases for equipment or software, working capital, business acquisition, et cetera, et cetera, et cetera. So many uses to this program, a very friendly program that also includes the financing in of fees and closing costs with this program. Generally speaking, the amount is typically up to $5 million, subject to SBA market rates, and structures up to 25 years. No forgiveness clauses. This is a structured loan program and also subject to guarantor support and available collateral as required. And this program would be obtained through a lender as well. This is not one that you would go directly through the SBA. It's facilitated by lenders. Some lenders work in different capacities with the SBA, so talk to your lender to learn more. I'm going to advance through the next slide as it's just some continuing disclosures. And then I'm going to move to a slide going into a little more depth on the EIDL program. Keep this as a best practice sheet if that's the program you feel will work best for you. You can see a little more information on this sheet than we saw previous. It gives you a little bit of information around who's eligible. And we'll see that this program supports some business components that aren't necessarily supported by the Paycheck protection loan. And let me just give a check out there because I think I might have skipped a slide for you, and I want to make sure that we're both on the same page here. The slide that we have showing, are you on the EIDL slide or are you on the Paycheck protection loan slide, Rebecca?
I have it on the EIDL slide first, the Paycheck protection.
Perfect, okay.
Before that.
I messed you up a bit there. Let's continue on EIDL and then we'll back up to Paycheck protection. We'll end on the most, I think, robust program being used right now. So let's continue on EIDL. So eligible businesses for EIDL are small businesses with less than 500 employees, including sole proprietorships, independent contractors, and self-employed persons. This application, available through SBA.gov, really walks you through the information you need to supply. You don't really need to worry about determining your loan amount. You're really just going to submit the information that they're looking for, and then they'll work with you on the proper loan amount, the right structure, and distributing the funds to you. And we can see here a little more information around how it works up above. Loan payments are deferred for the first 12 months. So another nice benefit of this program. And this program's a little different in that funds are dispersed in increments. The borrowers only take what they need. So a little more flexibility in the disbursement of funds through this program. And we have a link here on this page as well that you can use to link to the webpage of the SBA that you would use to apply. And let's jump back to slide 7 as you facilitate this for me. Thank you. And let's hit the Paycheck Protection Loan slide. This is going to be a good place to end because I think this is, as I turn the presentation back over to Lindsay, I think this is a program that most folks are going to have questions about. So some of you, I'm sure, have applied already. Some of you are still waiting to apply. I want to make sure that I cover this in a little more depth for you as well. So delving in a little deeper than that first slide that had the 3 columns on it. We can see again the loan forgiveness clause, rent payments and utilities included in that forgiveness clause, remember up to 25%. But it's going to be during the 8-week period following loan origination and disbursement of those funds. So a little different than the idle funds. You're going to get this loan dispersed at the closing table and you're going to get an 8-week period to use those funds. We have some reminders here of the 2-year term, and this loan has no payments for 6 months. Interest will accrue during the period, and again, the entire amount, principal and interest, is eligible for forgiveness through this program. Who is eligible? Businesses that have been in operation since February 15th of 2020 or on February 15th of 2020 and had employees for whom salaries and payroll taxes were paid, or independent contractors. This program also includes businesses and nonprofits. We have inclusions of 501c3s and also 501c19s as being eligible as well. We have employees up to 500, but this does include certain industries that have higher thresholds. So restaurateurs, hotels, you'll see some abilities to use the program even if you have higher employee counts. Sole providers, self-employed individuals, and independent contractors may also be eligible. We talked a little bit about how the proceeds can be used. And we also see that costs related to the continuation of group health care benefits during periods of paid, sick, medical, or family leave and insurance premiums can be included. We see that clause for refinance of disaster or idle loans if those disbursements were made for the same purpose and it was a duplicative transaction. There's some information on the bottom right that will be helpful. Of course, every lender who's facilitating this program may have a slightly different request, but the application information found below, the general information that you can provide, will be very helpful, as this will be information that lenders do need to capture. So keeping that in mind, I'm going to move the presentation back to Lindsay, who will follow up with a little more information on the flagship program that will cover other uses if you have them extending beyond the Paycheck Protection Program and idle. So Lindsay, if you could help us with some more 7A basics.
I will, and I'll be very respectful of time during these last few points because I'm sure that Rebecca has received some questions around the PPL and the idle loan program, and we want to make sure we facilitate responding to the Q&A. But as you can tell, both the idle program and the PPL program are really related to meeting the needs of small businesses in terms of their short-term payroll needs or their working capital requirements. Neither program is really by design. They're not intended for overall restructuring, but the 7A loan program can help with that. So this program can do a good bit to take a look at a firm's balance sheet as we're looking into a rough year and think about refinancing loans, extending terms to allow lower monthly payments and a lower debt service calculation. Again, this wouldn't necessarily be refinancing the PPP loans. This would be the existing equipment loans, mortgage loans, other types of funding that's on the balance sheet of a firm. This is one way the 7A program really supports small businesses, is because, as you see on slide 10, one of the first bullets are right in the middle of the page of the deck, is that it improves cash flow with extended loan terms. So it's a very cash flow sensitive, cash flow friendly loan program about reducing your minimum payments. So on a refinance, that can be very helpful. And it can also help with extended terms and low down payments if you're in a situation where you are actually going to need to make some improvements, investments, etc. and you want to conserve as much of your cash as possible. So if you have to make some equipment purchases, you have, this would be the worst time to have a major piece of equipment go on you. It's a great program to help you get through those times by, really on equipment when you're 100% financing pretty easily and still do it out over a 10-year term. So it's going to feel much more friendly from a cash flow perspective than some equipment finance options that you would get from a dealer. So it's a helpful tool in the toolkit for firms looking or in a position where they have to make some investment, maybe when they really wish they hadn't. It also allows you to lean into projections-based lending. As Heather called out on the slides with 3 columns, you can go up to $5 million in SBA loan programs. And I mentioned very early in the presentation about making sure you understand your financial covenants, because even if you are making your loan payments on time, you can end up tripping a covenant and be in a stressed out situation with your lender. And they can frequently need to turn that around and put stress back on you to get you back in compliance, because they're a regulated industry. One of the great advantages of SBA 7A lending is there are no performance financial covenants. There are reporting requirements, but you don't have to hit certain benchmarks. So it can be very flexible in its ability to allow you to make investments or take distributions, whatever you feel you need to do for the good of your firm. And often these closely held firms, there's really no difference between the good of your firm and the good of your family. And this is going to allow you to approach those sort of comprehensively. And I've included slide 5. There's a lot going on. There's a lot of text here, and I'm not going to spend too much time on it, but I just want to highlight some points that Heather and I think are very important for you, for all the small businesses to sort of think about. And this goes back to one of the very first points we made, which is, don't ride out the storm. If you're anticipating a weak year overall, it'll be very hard for any lender to provide you an approval on a traditional loan or even on an SBA loan if you're showing negative cash flow. As it stands, we have, even though we're closed for business and currently don't, we still had perhaps a strong, many of the firms in our region still had a strong first quarter, or at least a strong start to the year. This might be a time to look at restructuring your existing debt and putting it on a more cash flow friendly structure. If you wait to do it till you're absolutely in your worst cash flow position, it's very hard for a lender to do it. One of the ways to do that is using some of these consolidation loans that the 7A program can offer that the PPL and the EIDL loan can't. And all of these loans can work in tandem. They're not either or, but it's something to think about. But the cost will be ticking on these as well. Even if it doesn't feel as urgent as the PPP loan, it's going to be very hard for lenders to approve firms if we stay completely without any revenue or cash flow for too much longer. But technically, lenders still can approve off of the annual cash flow this early in the year. So I just want to bring that up, food for thought, and certainly willing to answer questions on that, or if you have something later down the line. But for now, I'm going to turn it back over to Rebecca, so that Heather and I can see if we can address any questions that the group has surfaced.
Okay, thank you, Heather and Lindsay, very much. So we did have a few questions come here, and as we go through these, if anybody has any other questions that pop up, please do shoot them into the chat box, and we'll make sure to get them covered. First question that came through was wondering if a person can use the PPP to pay for payroll and then the EIDL to pay fixed costs.
Thank you. That's a great question. This is Heather. I'll jump in on that one. So you can apply for a PPP loan and an EIDL loan. They just can't cover duplicative buckets. So if the Paycheck protection loan is available to you and you take those proceeds for use of payroll, you would just need to use the EIDL loan for other purposes. And if there was some redundancy through using the EIDL program initially as it was rolled out, that's fine. PPL can just pay off that component of EIDL, but you could move through with applications and disbursements from both programs and ultimately have EIDL cover a bucket extending beyond what the Paycheck protection program covers. So you could do that.
All right, thank you, Heather. Okay, next question was, someone was under the impression that the idle loan would give 10,000, the first 10,000 that would be borrowed would be forgiven to spend on payroll or fixed costs. And then anything after that 10,000, the borrower would be responsible for the rest with interest. Is that correct?
You are hearing correctly, but it is still an underwritten amount. They're calling that the advance. So when you do go to the SBA.gov website to apply for the idle loan, and it'll ask you if you want the advance. That's what they're calling that first amount that they do end up forgiving. So yes, and it is up to $10,000. It's not automatically $10,000 for every firm. So they are going to underwrite the amount that your advance could be. So then the balance of your idle loan would be due as a normal loan, but you would get that initial amount as a grant, basically up front. It'd be a forgiven amount, and they're calling that the advance. Now, the federal government has been really working very quickly on these stimulus initiatives. So there was the initial rollout of, an idle, as Heather said, has existed for a long time, usually meant to handle responses to flooding or earthquakes in a particular region. So it's never really handled this type of volume before, the whole country, basically. So it was initially sort of amped up for the COVID idle loans, the EIDL loans, and that was very exciting. And it was weeks later, as they continued to make stimulus initiatives and enhancements, that the advance program came out. So there are some firms who all applied through the SBA.gov before the advance questions were in there and before that for the grant, for the forgivable amount. So just make sure that when you are assigned your case manager, if you were one of the older idle applications that didn't have the initial opportunity to request the advance, you're still eligible for it. You should be receiving, they are trying to send out automatic notifications of those, and there'll be more to come on that as they're catching up on their volume.
Lindsay, that's such a great comprehensive.
You are right.
That's such a great comprehensive response. Thank you. Help me out if memory serves. I feel like the update date is, as we talked through applicants before that opportunity opened, I believe the update date was March 27th for the SBA. So if you apply before the 27th, you might be one of the older applications that Lindsay's referencing. And for the folks that are applying since then, I think it might be found on the bottom of page 4. It's a box that you have to check for that program enhancement. Does memory serve there for you, Lindsay, if that's correct?
You're right, it is, yes, that's right, and it is box 4. And they were going to send out automatic notices, but I know that not everybody has received those yet. So be proactive and go into your application. If you don't yet have a case manager, go to page 4 for the advance. And if you have a case manager already assigned to your idle loan, bring it up with them.
Thank you.
Great, that was a very, very helpful response. Thank you so much. So for our next question, this kind of sounds like it might be coming from someone who's a contractor with a restaurant. So if a business is a restaurant vendor, in this case, a cleaning company, is the restaurant responsible for seeking funding to keep the vendor paid, or should the vendor seek its own funding? In which program, PPP or EIDL, is best if the vendor needs to seek its own relief funding?
That's a great question.
Yeah. Go ahead.
Yeah, I would say, yeah. It's really a 2-part answer. So I'll field the first part. Heather can jump in, probably finalize the which program discussion. But it is not the restaurant's responsibility to seek the funding, and in fact, the restaurant could not. So the restaurant, when they apply for their PPL funding, they can really only use their W-2 payroll, plus the health care and health insurance and the benefits packages that go with their payroll is what they're allowed to use in their calculations. They can't, and that's what they can be approved for and are eligible for in their PPL funding. It's really, and it can only be forgiven if they spend it on their payroll. So if you're a vendor that either invoices another firm or restaurant, or if you work as a contractor under a 1099 basis, Either way, whether you're a payable or a 1099 engagement with that restaurant or any other firm, know that they cannot seek nor can they be responsible for providing you relief funding. They're limited only to their payroll under the PPL. Now, they can use idle funds for fixed costs. So that would be something where if they still needed services, they could utilize the idle loan to pay for the services they deemed really necessary for their firm, but it's not an obligation of theirs to seek that for the contractors. But Heather's going to discuss what that means for you then as the contractor.
Yeah, and for folks that are receiving 1099s, you're eligible to submit for one of these loans too. That date is going to be on April 10th. So contractors who receive 1099s can submit for themselves starting on April 10th. And of course, too, if there's, like Lindsay said, the focus of the Paycheck Protection Program is really to cover payroll costs. There are some allowances outside that, but the payroll costs is the driver as to the total loan amount. So if there's anyone who doesn't qualify through the Paycheck Protection Program, you may look to idle to see if those monies that you're looking for can be supported through that program.
And we also, I'm sorry, I did also want to clarify, because Heather corrected me on this earlier the week, that this is an area where the conversation has really been evolving and the clarifications from the SBA have been occurring pretty consistently from last Friday when it was released. And that is, so say you're a contractor and you perform, well, or rather you're a firm, a vendor of a restaurant, and you perform services for them, but you're not on a 1099 basis, you're just invoicing them and as a cleaning service or et cetera. And so what do you do then? You're not really getting 1099, but you're also effectively out of work. And if you're a single, if you have employees, obviously you're eligible to apply for the PPP loan programs as well for your employees. But if you're pretty much a one-man show, a woman show, you are, like the contractors, eligible to apply starting April 10th. Even though you don't technically have a payroll calculation, there are a couple other ways to calculate for the sole prop type of businesses.
Thank you, Lindsay. I didn't quite catch in the beginning where you were driving at, so thanks for that help there. And I'll just read some narrative from the actual program language to help there. So the language as to what qualifies as a payroll cost, remember April 10th, like Lindsay said, but it does include for an independent contractor or sole proprietor, wage, commissions, income, or net earnings from self-employment or similar compensation. So that's the clause that's going to include you on April 10th.
Okay, thank you. Very helpful again. This is really great. There are a lot of really good questions coming through. So for the next question, for the Paycheck Protection Loan, do you have to bring back all of your employees or a percentage of your employees if they've been laid off?
It's a very good question. So remember, as Heather said, remember that when you do the Paycheck Protection Loan, it's initially a loan, and that the loan for which you're eligible is 2.5 times your average monthly payroll. Round 2 of that process is to apply for forgiveness of that loan, to make it not just a loan, but in effect free money. For it to be forgiven, you do have to demonstrate that you have made you've used the funds for the payroll in the last 8 weeks. So if you only bring back a half of your staff, you're very likely going to see a reduction in the amount that's forgiven. So you can get the PPL loan for the 2.5 times your payroll, but it won't all be forgiven if you bring back a small portion of your staff. That said, it is still a pretty attractive loan. It's at 1%, so it's still relatively cost-effective capital, but you have to recognize that there's sort of two steps to it, the getting the loan and then having the loan forgiven. Because you have 8 weeks to spend, 2.5 times your average monthly payroll. Yes, you can use a little bit towards, you can use 25% of it towards some other expenses, but you're not going to get to most of your payroll expense in 8 weeks if you're not bringing everybody back. So, but that's not necessarily, it doesn't mean you can't use the program. It just means you have to understand that that's going to remain a loan and it won't all be forgiven.
And Lindsay, is there a prepayment penalty on that loan if it does go into loan, the proper loan status at the end?
No. So if you want to, if you just need to, there's a residual amount you couldn't document and it's like $15,000 and you just want to pay it down, the first nice quarter you have in 2021. Exactly. Heather's right. She's giving me a softball, but no, there's no prepayment penalty. You can just accelerate that as you need to.
Okay, so there was another part to that question, not necessarily related, but so this same person had applied for the EIDL loan last Tuesday and hadn't heard anything back. And the SBA had said they would hear something within 3 days. So they're curious to know if you've heard of anyone being assigned a case manager yet, as she has not received an email from anyone.
I would not be too concerned about that. I appreciate that question, and I really like that you're following up and active on that. I'd say that, as Lindsay mentioned, the program that EIDL uses, the disaster program, is really built to handle a geography in a limited way, not really built to handle an entire country and most businesses in that country being affected. So I would say that if they're extending a little beyond their service level agreements, you be comfortable. I think it's probably just in processing and fine. I'll also extend that guidance as you work with your lenders through the Paycheck Protection Program. Your lenders are seeing much more volume than they typically process through the SBA program, so bear with them. It's fine to check back in. You can also just maintain some comfort through that time of uncertainty, but check back in periodically to make sure that you are in queue and fine. But I think it's probably okay.
Okay, great. That's helpful to know. Okay, next question. The CARES Act payouts will be offset against taxes owed as a tax advance credit against the 2020 tax due. Will the forgiveness of the Ppp be handled in the same manner, or is it truly a forgiveness with no penalty or payment down the line?
It's truly a forgiveness with no payment or penalty down the line. That said, Heather and I can speak to it from a lender's perspective, and it definitely is a no penalty forgiveness, but it does sound like the question here also has is curious about tax implications, and Heather and I are not allowed to speak to tax implications. So would that forgiveness count as income? That is a question for your tax advisor to support you in clarifying. So do make sure you're treating it appropriately with them, but there's not going to be any government or lender penalty on the forgiveness component.
And keep in mind, as tax deadlines are moved back, I think that's going to be a phrase that Lindsay and I find ourselves using quite frequently, which is more to come. I think there's going to be some evolution there, so certainly reach out to your accountant for that clarification, but be patient as they get you that clarification. Good thoughts here, though. Good questions.
Okay, it looks like we have one more question right now. So if anybody else has anything burning, make sure you slap it there in the chat box. So for our next one, if a restaurant is forced to be delivery only with half the employees, no waiters possible, can they pay their kitchen staff extra during those first 8 weeks of payroll to match the same overall amount needed for the PPP loan forgiveness?
There will be no mechanism monitoring your wage rate. So as long as during your forgiveness application component, you can demonstrate that you used this on payroll, then you won't have any issues with forgiveness.
And Rebecca, as you're looking to your queue, as you see questions coming in on that queue, we have a couple more minutes here. If we have a lull, we might want to talk a little bit too about part of the Paycheck Protection Program in reference to loan payments made for SBA borrowers through the next 6 months for them. So let us know how your queue is looking, and we can talk about some additional enhancements too if we have time.
It looks like we just have one more question right now, but yeah, we'll definitely, looks like we'll have some time to talk about that, and it sounds like that'd be really valuable information to share too. So let's see. So if this person's understanding correctly, she could still qualify for the Paycheck Protection Program, but if they don't use it for payroll, it will just convert to a regular loan rather than being forgiven. I think she's looking for clarification.
If it's not used within the 8 weeks following the disbursement, it will convert to a loan over the remainder of the 2-year term. But the only thing I would add on there, when we say if it's not used for payroll, remember payroll is the driving factor for the loan amount, that 2.5 times average monthly payroll, but other items are eligible to be used for forgiveness. So when you look at it from a forgiveness perspective, 75% of the monies provided for forgiveness needed to come from that payroll bucket, but other money could have been spent elsewhere and still eligible to aid in forgiveness, and that includes some other items too that extend beyond payroll and up to 25%.
Okay, next, there's one more that just popped in here. If you don't use the entire amount, can you return it?
Absolutely.
No prepayment penalty.
Yeah, there's no prepayment penalty. So when you're applying for forgiveness and you haven't used some of it, you would just turn it back in, apply forgiveness for the balance. And there are firms who have some sort of complicated, because the rules were just released on Friday, and there are lots of really, completely valid questions, different valid methods for calculating payroll costs, insurance costs, and seasonality. And there has just been a few things that are up in the air when we're waiting on guidance from the SBA. So I have firms who can calculate it following a set of rules. It sounds right this way. They can also get a different figure if they calculate it that way. So the guidance has been to this question. Well, you can apply for it using the most robust calculation so that you get the most, the largest amount of capital to support the needs of your team. And as we're waiting over the next couple of weeks, if you're generally not sure whether it's going to be calculation A or calculation B, just wait till you get confirmation before you spend down that difference. Because you can always just leave it in your checking account if you realize you calculated it a little bit wrong. As we learn a little bit more, each day we're getting updates from the SBA. So as we learn with more clarity how the forgiveness is calculated, to this firm's question about if they don't use it all, that's exactly what you would do with it. Just don't spend that last bit, and you can pay it down. There's no prepayment penalties whatsoever, to Heather's point.
Okay, great. One person is asking if they've already applied for EIDL, can they still apply for Paycheck Protection Program?
Yes, absolutely. Explore your resources and take advantage of them. If you applied for EIDL already and you received, even if you received supporting dollars for something like payroll, you can still apply for PPL. And a PPL loan is provided to cover payroll. Proceeds could just be used then to pay off your EIDL loan that was associated with that need as well, at least a portion associated with that need. And your case manager who's assigned to your EIDL loan could help with that too, as well as your bank. Okay,
great. And this person, their credit union doesn't participate, so they're looking for where they could apply. Do you have any pointers for that?
That's a great question. Here at Huntington, we're very proud to have been the regional leader in the SBA program and frankly, the national leader for a couple of years running now. And we really have been fortunate through this program rollout to be able to advocate for small businesses through this legislation going through. Right now, we are generally, from a lending perspective, most lenders are being respectful of the know your customer requirements that are also in play for these PPL transactions. Those are, of course, part of the Bank Secrecy Act and Money Laundering Act. So knowing that a client's bank typically knows them best, most lenders are directing clients to their bank. We here at Huntington recognize that not everyone banks at a bank that will be supporting payroll protection loans. We are currently endeavoring to work through our client volume and help them get these funds as soon as possible. I think that some banks have reached out and said they'll only be doing client volume. We have not taken that stance. We really hope to be able to help all clients in need, whether it be our client at this time or prospects in the future. But there's going to be a little evolution right now as we continue to work through our client volume. So hoping to help more in the future, but more to come.
And looks like one more.
I know it. So go ahead.
Sorry, go ahead. No, you go.
I was going to let you know that the SBA district office, the Pittsburgh SBA district office, is trying to keep tabs on which lenders are participating in the PPP program and which lenders are participating just for their clients. I think at this point, most lenders are really only supporting their clients. There's a few, there are a few lenders like Huntington that plan to help the broader community, but the volume with getting through our clients' applications has just been, obviously a top priority for our customers who've banked with us for a few years. We owe them that commitment. So we're working through that now, and we're looking to look at things next week. But if you're looking for a broader, menu, so to speak, of lending resources, the Pittsburgh district office is a great resource for that. And if your need is on the small dollar side of things, if your payroll needs are pretty modest, but still very important for you and your team, there are some SBA resource partners in the micro lending space that might be able that they could play matchmaker and introduce you to for some of the smaller micro loans. So don't overlook the district office itself as a great resource as matchmaker.
Thank you very much. And just to kind of add to that, I did just put a link in the chat box from the SBA where there is a link to help locate some local lenders for the Paycheck Protection Program as well.
Thank you, Rebecca. Great, thank you.
Well, thanks to Carol. She slipped it in there. So one other question was, do we need to get a certificate of good faith?
The lenders have discretion over their application process, and so you do have to do a self-certification. Some lenders have embedded this as part of their portal. To some, it's going to be a form that you sign. It's part of the process, but it's not something you have to have at your fingertips for step one. But you will be making a certification that you need to use these funds, that you've been impacted by COVID, and that you are the right person. So you're going to have to make those attestations, but you don't have to do it in advance of your lender discussion. That's something that's probably going to be provided to most firms from the lender as part of their process.
Okay, well, it looks like that was the last question. I know we're right at time, but if you have a few more minutes and you want to share the tips that you were discussing before we wrapped up those last bit of questions, you're more than welcome to. Just like I said, as we plan to record this and share it out, it might be helpful. So if you've got a couple minutes and can share that, that would be wonderful.
This will be a pretty quick point to end on, and I think it will ensure that we end on a high note. Lindsay, do you want to talk a little bit about that 6-month provision within the Paycheck Protection Program if folks aren't aware of it yet?
Sure, Heather, thanks for remembering to bring this up. So this is a very exciting mechanism because like Huntington, we're one of the largest hospitality lenders in the state, and we know that many restaurants are financed using SBA credit enhancements. So if you do have an SBA loan already as part of the CARES Act and as part of the updates that were coming out last week, you will not have to make any payments for the next 6 months, which is very exciting, but it's really even more generous than that. The payments are being made for you. So they're not just being deferred and tacked on to the end. The payments are going to be made on your loans by the SBA. So that's very good news to help some of our great SBA clients in the region. And that's not a Huntington program, that's the SBA's program, so it'll apply across the lenders. So that's some great relief you'll have. It applies also to the CDC component of any SBA 504 loans, if you bought any real estate or anything like that using a program similar to that. So It's a very attractive feature for existing SBA borrowers on their existing debt.
Wow, that is definitely some
And
good news. Oh, sorry.
really, really exciting news. And there'll be a clause in there too for applications that are closing here in the near future too. They'll also qualify. So a great benefit for all the SBA clients. Lindsay and I really, really believe in this program. There's a reason that we dedicate 100% of our time to this program. We feel that it brings borrowers a lot of advantages, but a really fun one that just rolled out there.
Agreed.
Yeah, that's wonderful. Thank you for being sure to add that information in. We just had a couple more slides I just wanted to share with everyone. So this is some additional support for the Paycheck Protection Program. I know this first link was shared earlier by Lindsay and Heather, the small business support they offer. Neighborhood Allies is also offering free one-on-one support with the Paycheck Protection Program. The Allegheny County Economic Development has free resource and technical support, applications assistance available, and you can contact Laura Walmsley, their business development manager. Her contact is there on the slide. We also have resources listed on our Sustainable Pittsburgh page, the Chatham Center for Women's Entrepreneurship, as well as Pitt Small Business Development Center have some really great resources available out there for small businesses. And this last slide here is just some additional loans that are available for small businesses outside of what is available through the Small Business Administration. So there are some links there that you can check out as well. But I thank you all for your time today. And thank you so much, Heather and Lindsay. Your expertise has been invaluable for this audience and for me too. So thank you very much for taking the time.
Thank you.
Thanks everyone here for being attentive, the great questions you brought up. I know that it's going to be helpful to everyone as we get it shared out. And I also did just put our URL for Sustainable Pittsburgh and my contact information at the bottom of that last slide. So if anybody has anything that we can be supportive or you'd like to contact me about for any reason to help your business, please feel free to reach out.
Rebecca, thanks for everything that you and Sustainable Pittsburgh do. We certainly appreciate you getting this information to the hands of the folks that you know.
Yeah, thank you.
Thank you.
We appreciate you very much. All right, well, thank you everyone. Have a great afternoon and know that we're here for you. And take care.